Good evening. Ira Epstein with your SPDR-ETF stock market wrap-up. And this wrap-up is for Thursday. And we're at the 17th of July, 2025. And what a day. Some of the indices back up to new highs. By the way, I hope you like my T-shirt. I love these. It was interesting all day long. And we did get some news, but let's go to what we get tomorrow, and then I'll come back to all this, all right? You're going to get the housing starts and building permit data at 7:30. You're going to get University of Michigan prelim July. That's the July consumer sentiment numbers. They'll come out at 9. You had Netflix come out after the close. Income, a beat. Well over what even Fact said it set for the estimate. Earnings, pretty darn good, another dime higher. Revenue, a beat. Forward guidance, going up. Yet the stock is down about 1% in the market. Why? Well, the reality of the situation is it's the best in class. That's the way to look at it first. Number two, the PE ratio is 46-47. I mean, that's a high number. Is the stock going to drop here? I doubt it. I think it's going to hang around here, and it's still good. It just wasn't a blowout number. Something crazy. But their conference call is going on. We'll see what they come up with. They're generally pretty good at that. You can see BND up a little bit. Our Amazon, I say ours because a lot of you that trade via my morning subscriber videos, the paid ones, Amazon, you're in Netflix. There's a lot of trades that we have on at this point. I keep watching Microsoft. Uranium still looking very good to me. AMC getting a bit of a bid, but always remember on AMC, they keep coming out with new ideas and new products that I love. The problem is every time the stock goes up, they liquidate by issuing more stock or something so that you get hurt. If you don't keep buying, you get liquidated down. We saw a little bit of a break in Tesla, Lilly down a fraction. Abbott got hit today, so it's something you want to watch. Here's your NVDA coming up very nicely today. GM up, but Ford down, so there's nothing going on in the autos. And down a little bit in Uber. As Uber's buying in with another company to go into foreign countries for robo-taxis. Do they really belong doing that? That's the thing I don't know. I'd be against it if I were there. I think they're better off going to everybody saying, we want to represent you, not compete with you. And the moment you do that, there is a competition to it. So why don't we go to the charts and see the action that we're getting? When you look at Netflix, up and away. Outside day up. I'd get nervous if today's low was taken out at 1244.80. The aftermarket, as I'm talking to you, is around 1262. So it has slipped back from about $12 from that high. But look at how much it was up today. So you're giving back a portion of the gain, but it's still looking pretty good. The chart pattern is still one of higher highs and higher lows. The resistance, as I see it, should be the 18-day average of close at the 1280 level. The market, if it can clear that, and it hasn't, well, then you open it up for wherever the Bollinger Band is. If you take out today's low, then I'm going to look for the market to go back to wherever the lower Bollinger Band is. Currently, it's at 1230, but it will climb tomorrow. And momentum, oversold. So do I think you're going to get people going short here? No, not when you're that oversold, is my guess. The bias is down since you're under the 18-day average. The swing line is up, and we already know it's down a bit in the pre-market. We'll see how that finishes up. In MP materials, look at every day. 1, 2, 3. What is that? 4, 5 days, 6 days in a row over the upper band. But we know the reason. You get Apple buying in, you get the U.S., the Pentagon's buying in. So you're getting these companies coming in, either buying stock, buying material. That, too, will have to consolidate. It's a good thing to be watching, but that's about it. In Dash, I mentioned yesterday, you might make a run at the lower Bollinger Band. You're very oversold. Not the place I'd aggressively want to be short. In Google, you have the bullish embedded reading. That tells me pullbacks like today, probably getting bought. Market's still looking to move up. Wouldn't surprise me if we make a run at the upper Bollinger Band. Jefferies and other companies are starting to pull back on Starbucks. They give the new CEO a lot of credit. They hope he does well, but they think it's too soon for this market to make much of a move. The trend is certainly down, so I'd keep my eye on what it does here. Just an interesting chart to be watching. Robinhood, did you see today? The three bills that were at the House of Representatives, and by the way, I'm hearing $200 million was spent on lobbying efforts to get this through. All three passed. Two of them now go to the Senate for approval. One had already passed the Senate. Now that it's passed the House, it will go to the president. And the president wants all three of these to pass. What he wants to get done generally is getting done. That's how I'm going to keep looking at things until that game changes. Tesla fighting a battle at the 18-day average. Momentum up and trend up, though. So until the market gets back underneath 310.50, I think you give the market the benefit of the doubt. However, I never like buying into this when it's just hanging right there. You can go either way. In stocks, you had a little bit of a resurgence. The market, though, if we take a look here, I'll show you. The market had come down, and yesterday, you had lost your bullish embedded reading. You did not get it back today. So when you don't get the readings back, it's a sign that before the market makes a new high, ideally it's going to slip a little bit and get back to that 18-day average. In the financials, you came down, you're hanging at the 18-day average. I consider this a break in a market that still has upside bias. We'll see what happens, but it's certainly not looking like a market you run at. XLI, if you saw my morning videos as a subscriber, I keep telling you this is the market where I'm convinced the pros just keep buying the market, looking for it to go up even further, as all cylinders in the U.S. are firing away. We're through the first leg of the tariff story. The tariffs did not come out as high as they could have been, with the exception of Brazil. We'll find out what the other 150 countries are going to get, and we'll find out if more deals are being made with India, Thailand. There's some deals that are still out there that should be done. However, none of these tariffs are so large that they shook the market like we first heard months ago on Liberation Day. That's the important thing. In XLI, higher high, lower low. When we come to the gold market, just sort of sitting. Gold isn't the place to be right now. This is a risk-on environment. This is an environment where every break in the stock market of any small amount gets bought, and the market keeps coming back at you. Until that philosophy changes in the market, and it can change on a dime, but until it does, gold is the hard market to buy. That's not the case in silver. In the silver market, there's a catch-up game that has to go towards the gold. And as you keep coming up in this market, you keep your eyes on what it's doing. It's got to clear the upper Bollinger Band. But these are multi-year highs, and I'm looking for even more. There is no reason that differential can't narrow in more if the economy stays strong. In the copper miners, I wrote today in my newsletter about this. And I showed traders, if you'll remember, when Trump put on the 50% tariff, I told you the unwind will now happen in London. The squeeze is over. And what has happened is just like this. Ships were coming at America. They've turned around 180 degrees and they're going back. Now you have more material that is set up that can land in London for delivery. Why? Because the Trump tariff date, a lot of these ships can't bring their copper where they can get it into the U.S., Alaska, Puerto Rico, other areas in enough time. That's the importance. So you're going to rebuild the stocks there. And that affects the miners, and that's why you're coming down. Miners aren't just U.S., they're worldwide. In BND, you can see how the bonds, I know traders keep saying, oh, they're not going to go. You could go to 5% here. I mean, everything Trump does to push on Powell could backfire on him. And he can keep rates higher for longer, and that isn't a good thing. And when rates do break, what's the reason they're going to break? Trump is thinking just because they're too high. What if the labor market starts weakening and other patterns that the Fed, its two mandates say it has to look at? Do I think the Fed's going to do anything as we now enter the blackout period for the next Fed meeting? The answer is no. So keep that in the back of your mind. In UUP, well, look at how the dollar's come back. Now, where did it stop? How often do I teach you here? The first time you hit a Bollinger Band, up or down, that's often an area where professional money comes out of the market. And that's exactly what I think was going on today. In FXE, I've been wanting it to hit the lower band. It just keeps missing it, unfortunately. It's oversold. It may not get there. And we should have. That's about it. So I didn't think there was much more there. I want to remind you, if you have TradingView, and let's get to that right here. If you use TradingView, and a lot of you do, all of my indicators are available to you in TradingView. Exactly the way that I use slow stochastics. The formula is built in. My swing line indicator is built in there for you. The moving averages I use, you'll have to change the values of some things like the window envelopes, but all the basics are there. And I even mark off outside days up and down since they're so important. And of course, you can turn these features on and off within it. To get this, you go to iraepstein.com. Client resources. You go up on the top right, client resources. That will be there for you. You only use 2 pairs. For those of you in this, you understand what that means. It leaves you plenty of room for other things you may want to get in there and work with. So the 2 slots, very, very simple. How do you get it? I'm going to repeat again. iraepstein.com. And when you get there, go to client resources on the top right. Sign up right there. I'm Ira. Have yourself a great day. I'll catch up with you all in the other videos tonight and, of course, in the morning flash. You take care.